We in the Midwest have the same problem we have with crude oil, massive oversupply from the U.S., and we have a situation where the leader of the world's largest energy producer, net exporter of crude oil and natural gas, wants lower prices for midterms. He's going to get them. So that, to me, as I look at this, is a classic peak kind of sign. So we've had key events to push prices up. A colder than normal winter pumped up natural gas. It's already collapsed. And then the first ever closure of the Strait of Hormuz. How long is that going to last? So you have to think to yourself, how are things going to look by the time we get to midterms? And I fully expect the whole situation in Iran will be subdued and we'll head towards lower prices. And a good example, if you look at Brent, it made a new high above last year's high around 85 yesterday. But that December contract, which will be front month right before the midterms, is running around 70. And it's probably heading towards 58. A good example is December last year went around 65, and that was before the U.S. Subdued Venezuela and Iran. So to me, this is a classic peak, potentially in oil, unless something really goes bad with the war.
Mike, I'm an equities person, so I'm going to ask a stocks question for equity investors here from a commodities perspective. Paul and I have been talking about how $100 a barrel seems to be the pain point for equities that Wall Street keeps citing. I know we're ways away from that right now, but what is the possibility that we could see those levels? Is that kind of off the table at this point, or is that something that you're thinking about at all?
I am, but you only hear those risks when we get kind of typically when it's time to sell. Those are usually sell signals because what's it going to take? A potentially significant military shutdown by the enemy, Iran, of the Strait of Hormuz. Right now it's shut down by insurance companies. Within a couple days, that's probably going to be completely alleviated and we'll go back to the trend. The key thing to remember is the Western Hemisphere is the price maker now in crude oil. Massive excess supply from the U.S. and Canada, running close to 8 million barrels a day of surplus supply versus demand. And this spike is just going to accelerate that trend. So you need some kind of sustained supply curtailment in the Middle East, which is unlikely. Otherwise, the trend usually ticks back lower and potentially starting today. So look at the fact is by the time we get to midterms, is it going to look like this? You know, we've had 5 decades of wargaming for the world's largest military to handle this situation. If it's not a good situation, the Trump administration in midterms are going to have a big problem. I think they're going to be able to say, yeah, that one's done. And maybe even leadership in Cuba has fallen after Venezuela, Syria, and, and Iran. You see the trend?
Mike, you said yesterday you're in Covington, Indiana. So, of course, I Googled map it. We're talking the absolute middle of America, right between Peoria, Illinois, and Indianapolis. So we got to go. You're probably the only guest we can talk to and say that just went to an ag conference. What are the farmers telling you when you spoke to them yesterday? How's the farmer doing? What's the outlook?
Well, that's the wonderful thing about Covington, Indiana. There's only one place to go, and that's the Beef House. I've been going to this conference for decades. And people who wear overalls are very friendly, typically. The key theme is massive supply. Brazil is every other word, most notably Brazil. We have to find ways for demand, which typically means biofuels, which is part of that energy pressure factor, because that means more and more supply from U.S. biofuels. Ethanol, E15 going that way. They need something to support the prices, which is what we're probably going to be talking about with crude oil by the end of the year, because it's just a massive oversupply. The wonderful thing is called superabundance. It's just bad for farmers to make money.
Mike, we always appreciate what an expert you are on a swath of different asset classes, from gold to natural gas to oil, and Bitcoin is also something that you're an expert in. So I have to ask you, looks like it's rallying toward 73,000. Is this finally the breakout that investors were hoping for, or what's driving this rally?
I doubt it. Bitcoin's in a bear market. Initially, in the beginning of the year, I thought it was a worthy short around 94. Now it reached good support around 64. I think the first good resistance now to test is around 74. It has to stay above that level, but it has a key problem. The whole space is heading lower. There's an unlimited supply of cryptocurrencies. Mr. Trump probably put in the peak, and the bottom line for these highly volatile risk assets to go up is NASDAQ volatility, basically near a 10-year low, has to stay low. And to me, it's the risk of all that volatility and commodities and crude oil and precious metals trickling over to the stock market, and that's bad for cryptos, most notably Bitcoin.
Hey, Mike, what are the farmers telling you that you saw yesterday? Are they getting aid checks from the government? Is that
yeah.
Really? And is that that's got to help them out, right?
It helps them, but they hate it. They said, yes, we're going to cash our checks. I mean, no denial, but they're so honest about it. We would much rather have higher prices so we can produce and make a decent profit. It's what they want to do, and they all love, corn's been the key place to go, but they don't like it. Also, they point out it brings on more supply in places like West Texas, where they probably shouldn't be growing too much corn. It means, to me, the problem is we probably have to find that low price cure before we find a bottom in prices, which I think around corn is around $3.50.
Right.
And I've been pointing out in crude oil for almost 4 years now, that low price cure might be around 40.
Yep.
And these aren't profound. This is usually where it happens.